Every now and then, the market surprises us with how it responds to earning results. Case in point, New Gold. Despite high costs and the failure to post positive net income, the company has seemingly won over investors, who have responded to the results by sending the equity up by nearly 17%. So what's the big deal here? Let's dive in. New Gold in the first quarter of 2025 posted top-line revenue of $209 million, which was a 9% increase on a year-over-year basis from the first quarter of 2024. The figure follows the sale of 52,000 ounces of gold at an average price of $28.64 an ounce, as well as the sale of 13.2 million pounds of copper at $4.17 a pound. Gold sales were down 26% from Q1 of last year, when 70,000 ounces were sold at a price of $20.61 apiece, while copper sales improved 10% from 12 million pounds. Those copper pounds also saw an improvement in pricing, with sales last year coming in at an average of $3.64 a pound. Operating expenses were down slightly year over year, coming in at $103 million as compared to $107 million in the first quarter of last year. The decline, however, was not enough, with New Gold posting a net loss of $17 million or 2 cents per share as compared to a net loss of $44 million or 60 cents per share last year. On an adjusted basis, New Gold posted net earnings of $12 million or 2 cents per share versus earnings of $13 million or also 2 cents per share in the comparable period. Cash generated from operations improved substantially on a year-over-year basis, rising from $55 million to $108, while free cash flow improved from negative $15 million to positive $25. New Gold entered the quarter with cash and cash equivalents of $213 million. Much of which will be used to settle $111 million in outstanding 2027 senior notes that the company has indicated they will settle in July. The quarter also saw New Gold issue $400 million in notes due in 2032, with those proceeds having been used to settle $280 million of those outstanding 2027 notes to date. Post-quarter end, a portion of that cash was also used for the repurchase of a 19.9% free cash flow interest in their new Afton mine from the Ontario Teachers' Pension Plan. That transaction, pegged at $300 million, also involved a $100 million gold prepayment plan, under which New Gold agreed to deliver close to 2,800 ounces of gold per month from July 2025 through to June 2026 at an average price of $31.57 an ounce. All right, let's get into the production side of things where stuff gets a bit more hairy. New Gold in the first quarter produced 52,000 ounces of gold, which was a 26% decline year over year from the 71,000 ounces produced in the first quarter of 2024. But New Gold says that this is according to plan. The figure represents 15% of full year guidance, which is said to be above the planned 14% of guidance that was to be produced in Q1. Copper production, meanwhile, amounted to 13.6 million pounds, an improvement from 13.3 million pounds last year. That production came at an average cash cost of $869 an ounce versus $874 an ounce in the year-ago period. All-in sustaining costs, however, were substantially higher at $17.27 per gold ounce sold versus $13.96 an ounce in Q1 of 2024. Broken out, New Afton produced 18,000 ounces of gold and 13.6 million pounds of copper, which was produced at an all-in sustaining cost of negative $687 per gold ounce sold. Production here was 28% and 25% respectively of guided production for gold and copper for 2025. Production came in above expectations, which called for 20% of guidance to be produced in Q1 due to higher than planned head grades. Rainy River, however, didn't fare nearly as well. Gold production here was 34,000 ounces, which was 12% of 2025 guidance. Again, New Gold says that this is above the 11% of guidance expectation they had, but we're not sure we're buying it. On top of it, those gold ounces were produced at all-in sustaining costs of $27.58 an ounce, which quite frankly is sky high, and it's shocking they still managed to make money on those ounces. The high cost and low production figures here are said to be a result of excessive waste stripping, with the majority of mill feed coming from a low-grade stockpile. That effort was completed in April, and the remaining benches are expected to be much more productive through to 2026. Underground mine development, meanwhile, saw the ramp hit the pit portal, reducing hauling distances and, in theory, lowering costs going forward as underground production ramps up. On a combined basis, New Gold says they are on track for current guidance, which calls for 2025 production of 325 to 350,000 ounces of gold and 50 to 60 million pounds of copper at all-in sustaining costs between $10.25 to $11.25 per gold ounce sold. All right, so let's wrap it up. As much as we'd like to criticize the production figures here, the reality is that New Gold is making money, even at lower production levels as they work to access new areas of mineralization. So it's tough to complain about any of the results here. Free cash flow is up substantially. They're about to capture all of the cash flow from New Afton moving forward, and the average sales price of gold keeps moving higher. Yeah, they may have had to enter a gold prepayment facility to buy back that interest, but it's at $31.57 an ounce, a number that not even a year ago seemed entirely unrealistic. So who cares? All right, everybody, thanks for watching. If you enjoyed this video, smash that like button, subscribe, or ring that notification bell. Guys, if there are stories you want us to cover, please let us know in the comments section. Thanks for watching, everyone.